Hey guys, it's Angelo Christian back with another great edition of Learning Hub. Today I have a very special guest, Mr. Stan Abiassi with Market
Thank you.
Street. Hey
Yeah,
man, thank you so much.
absolutely.
So, raising capital. That's obviously one of my biggest topics I've wanted to learn about for 2018. I've always had an aspiration to learn about investment banking, raising money. I went to school for finance and economics, and I've always wanted to learn how it works from the investment side, how to raise money. I've been an entrepreneur now for 13 years, and I've never raised any money. Everything I've done has been homegrown with my own cash, and that can be good and bad because it's I own 100% of the company, but my company is this big, and I know that you've been involved with some mega deals,
hmm
and you're a deal maker, and you've
hmm
raised a lot of money, helped a lot of small businesses
hmm
raise money, and you're kind of like the guru for the middle markets,
hmm
right? When people need help, they call Stan, they call your company to get help to raise money. And so the reason why I wanted to have you on the show, because we have a lot of followers, thousands of followers that are small businesses, entrepreneurs, guys like me that have revenue, almost trying to get to the 8-figure mark,
hmm
but haven't broke out yet, and trying to figure out what to do. How do we raise money? Because I can tell you, I've researched it, and I can't. I've spent hours, scouring the internet, trying to figure out how to raise money, and all I see is, well, if you don't have, and from what my learning is that if you don't have monster numbers, don't even bother.
hmm
And I know you have a different mantra, a different pitch out there to the marketplace, to the small businessman that wants to take his company into the next level. And so I'm very curious to learn more about you, the process, how it works, and I need to be educated. The followers need to be educated about how does it all work with raising money, because in my mind I'm thinking of like Wall Street the movie, and I got to go to Goldman Sachs, and someone's going to screw
Yeah.
me and try and fuck me and take my
Yeah.
money.
hmm
So and if I go there, I don't have $100 million in revenue,
Sure.
so I might as well not even bother and just
Right.
stay small. So
Right.
and so I'll kind of want to know, first off, who you are, your background, and then if you can kind of talk to us about, because this is what fuels America, small business
Absolutely.
and raising money
Absolutely.
and taking companies to the next level. So
hmm
your job here, your role is monumental. It's critical.
hmm
So first off, let's find out, who is Stan. What's your company?
So my company's Market Street Investor Relations. I do really only work with small cap and middle market finance, and not and let me explain what that means, because like you, everybody thinks that if you're going to raise money, if you're going to raise, everybody knows what a private equity firm is. If you don't look it up, it'll tell you in 5 seconds. But most people think, raising capital or growing a business, you have to have pristine financials. You have to be making a lot of money. You have to, and you gotta, and you're going in to talk to the Gold Sachs of the
Right.
of the world, and that's not really that's not really the case.
Okay.
Middle market is an area that can be anywhere between companies earning anywhere between 2 million
Uh-huh.
to $25 million in net,
Okay.
and that's who I work with.
Okay.
And like you're probably wearing 10, 15 different hats.
Yep.
You're the CEO, you're the janitor,
Yeah.
you're the
Yeah.
CFO, you're the trainer, you're the customer service rep,
Oh,
you're all of it,
yeah.
right? So you're working in your business, you're
Right.
just not working on it.
Not as much, no.
Right.
No, and I agree with you.
Right. So I started my company probably Market Street probably a little over 7 years ago.
Okay.
Okay. I got the taste of raising capital when I was in my 20s,
Uh-huh.
and I started with a little company, in the health club business that became a multi-billion-dollar organization.
Right. Are you allowed to say who that is, or?
It was 24-hour fitness.
Okay.
Yeah.
Wow.
And we were there in the early days, and instead of going and get my degree from a college, I got my degree in crash
Yeah.
course in how to open health clubs,
Yeah.
how to look at markets, how
Right.
to anchor myself
Mhm.
and brand myself in my club. And these, back in the day, these were $5-10 million clubs that we were building.
Mm-hmm.
How to negotiate leases, how to run P&Ls and all this other stuff. So really, I was a small business owner,
Mm-hmm.
and I got paid based on P&L.
Mhm.
At least that's the way that it was back then.
Right.
And then when the company went out and raised $500 million and we started opening clubs everywhere, I started to see, what real capital could do for a company, not only from a, value standpoint, but from an economic standpoint. Some of these clubs that we used to put in some of these areas would change the, economic makeup of that area. A lot of businesses benefited, but not only that, they were able to create a ton of jobs. And that's what small businesses do. 80% of America's small companies, right? It's only the other 10-20% that's big, Fortune 500, right? So I focus in on, so I started my company to, after, a few jaunts of this stuff, opened my own health club business. We sold that, and then, a partner of mine got me interested in doing, small cap investment banking. So I went to work for him as a investment banking associate. Started calling public companies.
So is it kind of like in the movies, like in the Wolf of Wall Street, where I know they're selling, stocks.
Probably back in the 80s, before the internet and all the regulation came into place. And guys like, Jordan Belfort, who's the Wolf of Wall Street, was the reason why a lot of these regulations came into play. But not when I started. By the time that I started, things were cleaned up. There, you have the Financial Regulatory Authority, you have the SEC that really came in and kind of really cleaned the things up, started protecting investors, and so you don't see a lot of that anymore. But from what I was told from guys that I learned the business from, it definitely was like that. So which is kind of crazy to think about, because you're giving these people money to manage your retirements, and they're out doing the things that they were doing in that movie, and it just doesn't make sense. So I learned the business from, really kind of asking small companies, well, tell me about your company. How much money do you need to capitalize it? And my partner's fund would set up financings. They were called pipe financings for these small cap companies to help them finance their business plan. And then we would talk to investment banks, secondary investment banks, and help them raise more money. So I did that for a few years, and then started Market Street after the market crash. To really kind of take what I had learned throughout my career, and start helping companies apply that to helping them grow their company through the right capitalization.
So, that's your background, and it sounds like, and just I've looked at your track record, and that you've really helped to, how you're different than the regular, investment firm and raising money is, like you said, you appeal to the middle market. But then, as far as because where I get confused and I get lost, and I think a lot of small businesses that I've almost been somewhat intimidated or turned off, because I think I can't get the funding, or I've talked to other businesses well, it has to be your package has to be so watertight that if you don't have the right EBITDA, or you don't have the right revenue, or if you don't have a CFO in place, that you might as well just forget it. But I noticed that you're saying that, and I know you've talked about some of the deals that you've been able to close and pull off, that those things are important. You have to have it, but it's also what's the story, what's the projections, what's the who's the guy running it, and what is the actual the risk to return ratio. So can you kind of talk on that, because I think there's a lot of people that are very intimidated about raising money, and that there's a lot of companies that could potentially break out, but they don't know where to start, or they kind of disqualify themselves. So, what's your opinion on that?
Well, I think, look, in middle market and small cap finance and small businesses is where the opportunity is. And all these guys know that, okay? I can't Google doesn't need me.
Right.
Okay, Google doesn't need a fund that's managing $400 million that does 5, 10, $2 million, $1 million investments into small businesses. Google doesn't need that. Big companies don't need this. But there's thousands of these, small funds, small lenders, that service a middle market, small cap market.
Right.
So it's there. there's the idea that you can't access that is because you do. So a lot of people don't even know that
Don't
these
know
guys
about it.
exist.
Right.
You
I
know,
didn't know about it.
right? And there's I could there's lenders out there that you would never even have heard of that I could throw some names out and nobody would even know that are managing millions of dollars and are looking for opportunities to help companies grow because they can come in, capitalize a business, get a nice piece of that company, and as it grows, really create opportunities for themselves and their investors, right? But they get it. They service this market. This is middle market, small cap.
Yeah.
It's inherent with problems, right?
Right.
There are challenges. That's accepted by this industry.
Okay. So it's kind of like you're saying that, like, if I'm a subprime lender,
Yep.
I know the guy's got dings.
Yep.
Right?
That's acceptable, to yeah.
Okay. So because that's been one of my
Mm-hmm.
one of my concerns, or because I'm thinking that because I go read online, okay,
Sure.
to go public or to get funds from Goldman Sachs, it's going to cost you $5 million.
Yeah.
Just for the hiring the right people.
Yeah.
You need to show net of 20 million.
Yeah.
And so I was like, fuck, I'm not, it's going to be years till I get there,
Yeah.
And so I'm like, so I stopped even, I
Yeah.
literally, this is what I was on the internet probably about
Right.
3 years ago.
Right.
When I want to start raising money.
Yeah.
And I was like, God damn it, man, there's got to be another way.
Yeah.
And then, somehow I ran into you.
Yep.
And, and then I started to learn more about it. You really inspired me and opened my eyes. That there is this whole other market. 'Cause I guess it's almost like a underground. I'm not going to say it's underground, but it's not on the. I don't know where it is on the internet.
Yeah.
So, so you're saying that you can get the money. What are some? What's the process? I mean, let's say that. I mean, do they, if someone wants to raise the money, I mean, how does it work?
Well, I mean, again, it all depends, and to kind of touch back on what you were saying from a public market standpoint, there are public indexes for small cap companies. The people associate this index with a lot of bad things happening, but there are real companies on this index. It's the over the counter exchange, the OTC.
Okay.
And that's for middle market companies. And it's otcmarkets.com. You can go there, and it's a full index. They have billions of dollars in liquidity that trades. It's not like a Nasdaq or NYSE, which, by the way, NYSE has a small cap index as well.
Okay.
And there's a lot of small cap companies that go onto that exchange. So if public is the right direction, or that the company sees as an advantage to do it, there are small cap indexes that you can go out on that don't require a lot of the liquidity and a lot of the qualifications that you would see on a Nasdaq or an NYSE. So that I wanted to make sure that I touched on that because you brought that up.
Okay, but now on that though, but to go public, I mean, you still have to have. Don't you have to have an investment bank underwrite it?
Nope.
You don't have to.
Nope, not on a small cap market. You absolutely don't. It helps, and we definitely, we would definitely introduce the company at the right time, to those investment banks, because little do you know, there's also a lot of middle market investment banks that are broker dealers that create markets for companies that want to go public. They exist to take small companies and make them the next, IBM, and they play in the $2 to $100 million range. That's where they finance, and anything over that, they're taking you to Gold Sachs when you get over $100 million.
Okay.
But there's a whole middle market investment banking. There's one that I, consistently deal with that's been around since 1925. They have 2 seats on the NYSE. They manage probably close to $4 billion between their retail and their buy side. And they have 100 brokers that work with them, 6 offices globally. And they are full-blown, middle market, full service investment bank. And there's hundreds of those investment banks that look to service companies in the small middle markets that are wanting to access public, or even wanting their help to finance, to finance their business plan, whether it's private equity, whether it's asset-backed loans, whether it's just debt that they provide. Those banks actually exist, and if a company wants to go public, they can do that even though they're small.
Okay. Wow. So, Okay. That's amazing. See, I had no idea,
Yep.
and I don't think, and I don't know. I mean, about all the follow. Most of the loans and customers that we help, they're normally doing revenue below 5 million.
Mm-hmm.
Small business owners,
Mm-hmm.
and they ask me all the time, "Hey, you know how to raise money?"
Mm-hmm.
And now I can kind of refer them to you.
Absolutely.
And we get calls all the time.
Absolutely.
And Stan's contact information will be on this podcast. There'll be a link. Do you have a website?
I don't. I'd
Okay,
say we're in the process.
Okay,
of
you're in the
building it
process,
right
but
now.
they can
Yeah.
contact you.
Absolutely,
All his
yeah.
contact information will be on there. So, now, as far as now that we know what's out there, what's available, is there? What are some take? How does okay? How does the what are some hacks or best practices?
All right. So there's a code to raising money.
Okay, that's
Okay.
what's the code?
Yeah.
Okay.
So, you know, as most of these and there are lenders, and even if you're going to a bank to do an SBA loan because you want to grow your business or acquire a business, okay, these are things that you can do, to make sure that you set yourself up for success, and you have a good chance of even getting that kind of financing too, because SBA is actually lending to businesses to grow their business too. Tens, right. 5, 10, we're involved in an $11 million financing with an SBA structure right now through a bank. So it doesn't have to be private equity. It doesn't have to be investment banks. There are middle market lenders that, do this stuff and do it through like a 504 SBA loan, something along those lines.
Okay.
But the code's basically the same. It doesn't matter what it is. And really, to keep it simple, even though there's a lot of details of this, there's 3 buckets here. The code is, first, what does your calling card look like? Because before anybody ever meets you as a business owner, and you have a chance to shine in person and get to talk to an actual investor or lending source, you have to be able to create the right impression. And you do that through a proper investment package, through a proper business plan, through a proper loan request package if it's a real estate deal that you're trying to put together, if it's development or you're trying to acquire a shopping center or whatever it is, because we do all of
Okay, but Stan, I'm running a business. I don't have time to make a business.
I understand.
So what do? I mean,
that's what we do.
Oh, you do that. Okay,
yes.
Well, guys, okay, that's good because I'm like you said, I'm the janitor, I'm the CEO, I'm the manager, I'm the recruiter. And then you want me to go make a package? I can't even tie my shoes, man.
Right.
So right.
So
I mean. So you're saying that because that's where I got hung up on.
Yep.
Is well, give me all this stuff, and the other thing is that I don't know if you probably know this, that a lot of small businesses, they try to write everything off.
Yep.
So how does that, like, I don't want to pay Uncle Sam.
Right, I get it.
So how does that? I mean,
Okay, so good point, because this is part of having the knowledge that we have at Market Street will help a business owner understand that going through a financing in middle market is different than paying the tax man or doing accounting, right? Okay. There's those things called add backs.
Okay.
Which I think you're probably familiar with. When you do a residential
mortgage,
loan, you're looking for ways to increase that income, right?
We do. Yeah.
It's no different.
Okay.
A lot of businesses, like I have a manufacturing client that takes a lot of depreciation.
Oh, sure.
Right?
Sure.
On a monthly basis to write down that income, right?
Yeah.
So we add that back.
Yeah.
You've heard of EBITDA, right? Earnings, before interest, taxes, depreciation, and amortization. Well, there's interest. So if you have a bank loan, all that interest you're paying for the year goes back to your net profit. You're adding that to the net, right? Which bumps it back up. All of that, taxes that you pay every year gets added back to the end of the.
Oh, really?
Yeah, and that's where the EBITDA comes in, right? All of that depreciation that you take off of your machinery, off of equipment, all of that stuff gets added to the net profit.
Right.
All the amortization that you're writing gets added. And that's where you come up to your EBITDA. So when a bank or a private equity fund says, "What are you doing in EBITDA?" you can add all of that back. It's not net, and then that's what your real number is.
I got you.
Okay,
I got you.
And they base that valuation on that EBITDA number.
Okay.
And then depending on what type of business that you're in, will determine how at what times your valuation is that the business is going to look at. Okay, your business is worth $10 million. It's worth $5 million. We'll loan you 50% of the value of business, 60% of the value of business.
Okay, now let me ask on that, because you're talking about a PE price to earnings ratio or multiplier.
Yeah, on some level, yeah.
Okay.
PE more really kind of relates to after you're public, but yes,
Okay.
it would
Well,
be.
I mean,
But
I guess it would
yeah, yeah.
be here. I mean, how do they? Because you're talking about a multiplier on the
Well,
EBITDA.
you have industry standards, right? So they'll look across. Well, this company's valued at this. So
Yeah.
like you can see internet funds, right? They trade at 10,
Mm-hmm.
15. Some of them trade at 20 times multiple because
Mm-hmm.
their margins are real high, right?
Right.
The lower the margins are, the lower
Okay.
the multiple is going to be on your earnings.
And for a private company, like a small
Mm-hmm.
company, what's a good multiplier, a fair multiplier that you normally see?
I mean, fair probably 5, 6 times.
Okay, so let's say a company has EBITDA of $2 million.
Mm-hmm.
So does that mean that the value of the company would be 10 to 12 million?
Mm-hmm. Somewhere around
So
there.
you multiply that 5 to 6 rate, the PE or
Mm-hmm.
the or multiplier times the net or the
Mm-hmm.
EBITDA,
Mm-hmm.
and that's how they determine the value of the
Yep.
company.
Yeah.
Now,
And then if the company has assets like real estate, and you take the debt off the real estate if there's any, and you can add the value of the real estate to that as well, because we're just talking about cash flow valuation, right? If the company has hard assets, there's value that comes in there as well.
Okay. Now, let's say that it's a new company. Like I'm just looking at, like, for example, like Snapchat.
Mm-hmm.
Okay, like I just that like companies like that, like Snapchat, right?
Mm-hmm.
That they have Rev or
Mm-hmm.
Uber.
Mm-hmm.
Uber's worth 75 billion,
Mm-hmm.
but they have no net income per
Mm-hmm.
se to shareholders.
Mm-hmm.
I guess so. When let's say that I have an idea,
Mm-hmm.
okay, and I want to come to you with the idea, but
Mm-hmm.
it's not really doing anything yet.
Mm-hmm.
So how do they raise billions of dollars and have no income to shareholders and pull it off, and people are just hand over fist trying to give them money,
Mm-hmm.
and those guys are just getting checks. I mean, so is that
Well, those are two very unique cases, right?
Uh-huh.
I think prior to Snapchat going out, the CEO said we probably will never make a profit. We lost 500 million last year, and they still raised what, $3 or $4 billion in the offering. I couldn't tell you why. It's because it's cool. People invest, and that's probably part of the reason why the market's where it's at right now, because there's no earnings don't match where the market's at right now. So those are two unique situations. Twitter's not, there's no way that Twitter should be worth what it's worth, because they're really not making that much money either. But from an idea standpoint, startups are, just, straightforward. They're some of the hardest things to get financed. But if your business plan and your package leading to the first, code that you have to unlock, or the first key that you have to turn, basically, is done well, and it exudes confidence, and it's believable, and you have a story that backs up the numbers, and more importantly, which kind of leads to the second bucket or the second key, what's your background? What kind of experience do you have?
Yeah.
Why would anybody want to give me money,
Right.
for this idea?
Mm-hmm.
Well, your experience and your background have to speak to something like that.
Right.
I'm sure on some level the people that started Uber and Snapchat had a massive background as it relates to doing this stuff. They were probably geniuses. They figured this out. And a lot of venture funds, which who knows sometimes why they make investments in Silicon Valley, but these guys, they look at deals, they look at how smart these guys are. They look at, how disruptive the idea is to the market. Mm-hmm. And and then they base their judgment on that. And if the idea, I have a client that's an artificial intelligence company, and they've raised over $10 million on an idea. Mm-hmm. Guy still hasn't made any money yet, but he's got people, and he's in Silicon Valley giving him money, because for all intents and purposes, he's starting to pull it off. What he's done is very disruptive and will change his market, and so people are giving him money. So it all depends on the idea, and then it all depends on the person who's going to be executing on that idea. Mm-hmm. And is it believable that he's going to be able to do that? Mm-hmm. Right?
So you're saying that if the person has a lot of experience, and the investors believe that the idea is that they can execute on, then they'll somehow set aside historical earnings and not really look at that as much.
Yeah, because it's a startup.
Right.
How do startups go from?
Well, no, that's wrong, because you mentioned Google, but you have to go back to that. Google sought investment funding in the beginning, and they went to a lot of places to raise those funds, and it was a startup. They had no proof of concept,
Well,
you know,
yeah,
and so
they had a little. That's a little different. They actually started Google on Stanford servers. It was started on Stanford servers.
okay,
So the university is, where that's where the founders went to school, right?
okay,
But yes, it was an idea.
yeah,
They actually didn't start making money until they figured out that little thing called pay per click.
yeah,
Right. Which, if you go back and read it, they actually took that from Yahoo. There was a big lawsuit with that.
yeah,
But they still didn't make money for a long, long
Right,
time.
right.
Right. Why? Because the idea, and they were it goes back to the explanation of what your idea is,
Mhm.
right? Which is what your package, and then can you get people to believe that you can actually pull this off? And
Well,
the idea that they had was, look, we're going to be able to create an engine where you can find anything you want about anything in the world.
Yeah.
And at the time, none of that never existed.
Mhm.
Never.
No, I know, and I
Yeah.
look at Amazon though. Jeff Bezos. I mean, he put it back in his report. I've been a shareholder of Amazon since like 2004.
Yeah.
And in his 99 report, he said we're not going to make any money for a really long time.
Right.
And the investors stood by him,
Mhm.
and you've seen what's happened to the stock of Amazon.
Yeah.
You know, I think it's trading at $1,700 a share
Yeah.
today. You know, and so I think
Yeah.
is he the richest man in the world today?
Yes,
I think
he is.
he's like the richest guy in the world.
It's over 100 billion,
yeah.
I think, at this point.
So, but there was, I mean, 2 decades where they had no net income,
Right.
right? And they were running a loss. So I guess the point, the takeaway, if you're a business owner out there or you have an idea, you can let Stan know what that is, and then he can try to help you to cultivate that idea to raise money. Because, like he's saying, even if you don't have historical earnings, but you have a tremendous amount of experience, or you're a small business owner like me, and you have a track record, and you're trying to figure out what the next step is.
Mhm.
Because, like, I'll look at me, like, I know that really for my company to grow, I'm going to need an injection of capital.
Mhm.
If I really want to take it to the next level,
Mhm.
we need money, okay? Because we need the infrastructure, we need the manpower, we need the talent, we need the real estate, and that's where I get hung up on.
Mhm.
Because like you said, it's either you're going to work in the business or
Mhm.
you're going to work on the
Mhm.
business. And really, the visionary needs to be putting a lot of time working on the business and the focus, the direction of where we're going, and not so much did you do this, did you call this person back.
Mhm.
That's what your management team is supposed to be doing. But it's very hard, because if this doesn't happen, well, then you can't pay the rent.
Well,
right?
that's a good point too, right? But that's why it takes somebody like me to come in and say, look, because I do this all day long. I look at businesses. I can see, I look at processes and procedures. I've been doing this long enough
Yeah.
to know, from an investor's perspective, that's what I'm looking at it as. So I know what they're going to ask ultimately when you
Right.
actually start raising money,
Right.
which is how we structure the investment package, is
Right.
to answer all of those questions
Right.
before they're even asked.
Right.
But you have a level of success already,
Yeah.
right? And yes, to grow your business, you're going to need an injection of capital.
Right.
But the other thing, and we talked about this, I think, a couple of times, is it's very important to know what your company is worth, so that you can structure the transaction the right way, so you don't get hosed because these guys some of them are sharks, right? And you don't want somebody coming in, a lender or a bank,
Mhm.
because their goal is to de-risk themselves. First thing in rule of
Mhm.
investment is to protect the downside. The fastest way that these guys protect their downside is looking at you and going, gee, he's probably worth 30 million, but I'm going to tell him he's worth 15. And I'm going to give him less money and take a good chunk of his business, so that I can build in upside, right?
Okay.
Going into an investment, right?
Mhm.
So they're going to try to cram down, the worth of your business, what you're trying to do. And so there's a lot of posturing. So it's very, very important. And that's really the third thing, that you need to be careful of, is making sure that when you put a deal together and you're about to raise capital, that you have an idea of what you're worth and what you're planning on doing is going to be worth, so you can appropriately negotiate and get yourself in the right structure,
Yeah.
and the right capital stack, and you're not giving away too much of your company,
Mhm.
or you're securing debt appropriately at the right risk rate, so that the company's set up for success.
Mm-hmm.
Because if you take a bad financing,
Okay.
it could take the company
You know who
backwards.
I'm thinking about right now?
Who?
Didn't I think you were at one time you were? Can we talk about that at all?
What's that?
The deal that you were involved with?
Which one?
Well, the one that took the one that was about to blow up, and then they.
Oh my gosh!
Can we?
Yeah,
can
we can't, but I can allude to it, right?
Okay.
It was actually it's very sad to talk about.
It is because I had huge expectations for that.
Yeah, it was very sad to talk about. It was a very successful organization.
Mm-hmm.
They were in the food service business.
Mm-hmm.
They were the first ones to really come up with the concept that they came up with. And they had built this thing, up over 7 years.
Yeah, I thought it was going to be.
Oh, it was.
It was.
Right. And you've heard that terminology, crest of the wave, right? And everybody else kind of rides it. Well, this company was really the starter of the wave, right? They were out ahead of everybody else. And they had built this thing up to like 60 locations in 7 years.
What was the sales at?
It was $100 million.
Oh, wow.
On blood, sweat, and tears. You want to talk about a founder working in his business? The guy actually built his first, laid the tile in the first restaurant, was actually cooking food, for his clients. He was in it, right? Working in it. And that's how the company started. And he grew that thing, to what it was. And they were doing tremendous amount of net revenue, and I came aboard and I knew them from past. And, we were going to do something extremed significant for them, put them in complete control. And they decided to take a private equity financing from a group and the thing to remember about financing groups is they all think that they know everything, right? They think that they know how to run a business. They think they know how to do all this other stuff. But a lot of these guys have spent all of their time, in finance. They came up as analysts sitting behind a computer, crunching numbers, doing PE ratios and debt service coverage ratios and credit analysis to try to see how to structure financings for their investment groups. And a lot of them spent 8 to 10 years doing that. They have no practical business knowledge. They don't know how to run a business. They don't know how to, budget. They definitely don't know how to hire, fire, train, develop, which is all the things that this company knew how to do, which is why they grew to such monumental heights in such a very short time frame. And so they took a bad financing.
Well, that's to your point.
Yeah.
That if you got to be careful.
Yeah.
Because it could also lead to your demise.
Yeah, absolutely. So and so they took the bad financing. The group got 2 board seats, and they came in. And this is, like any small business, it's creative, right? It doesn't meet any successful business or any successful story that I've seen. It's outside the box, right? You don't walk into, like when you walk into your organization, you're not like every other mortgage guy out there. You're doing things that nobody's doing.
Yeah.
And a lot of times you kind of get friction for that because it's not in the realm of what the mainstream is, right?
A lot of friction.
Same thing here, right?
Yeah.
They got a lot of friction because these guys had an idea walking in that they were supposed to fit a mold and they didn't. And instead of, accepting their uniqueness, they try to force their way on them. And ultimately, it meant the demise of the company. And they no longer exist. The company went out of business, closed all their locations because they took the bad financing.
I was a customer there. So, I mean, most of the people actually downstairs, or probably half of them were. So then I got the news one day. I was like, what the hell happened?
Yeah.
And so,
overnight, really.
Yeah, it was overnight. It was an overnight thing, yeah.
Yep.
Okay, so obviously those are some of the key takeaways, and we'll have all this information. There'll be information you can see, guys. You can, I think we have a slideshow presented that he's gonna. You can also download. So, from here, let's say that if somebody wants to reach out to you, I mean, can they call you?
Yeah, absolutely.
Okay, so how does that do this? Call you, or how does it work? I mean,
yeah, I'm old fashioned. Give me a call.
Okay.
I like to get on the phone with you. I like to start.
Wow.
I like to get to it, right?
Yeah.
I just want to start asking questions.
Okay.
To see if there's really something that we can do to help you.
Okay.
So that's typically the first thing. I'll start asking questions. I'll talk to you about your company. What you're doing, what your experience is, and we'll kind of have like a mini consulting session on the phone.
Okay.
And then after that, you can ask me questions and we can kind of go back and forth. And then if it makes sense to come out and see you, because I like to lay my eyes on things, like old school.
Yeah.
to see, what you're doing. Because
Yeah.
it's different when you can physically see what the company's doing as opposed to being on a phone or looking at a website.
Right.
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 And then from there, we just kind of figure out, how to help you put this thing together. So that's typically the first thing. You give me a call, I get on the phone with you. If I'm busy, I'll definitely call you back. I'll always return phone calls. And we'll set up a time to have a real conversation about, what you're trying to do. And then, we can kind of put you in touch with my team who does build business plans, who does build financial models,
Right.
who does investor decks, who does all of that for you.
Okay.
You've had experience with some of them, right?
Yeah.
And it may be an hour conversation, maybe a couple of touch points, maybe sending them a few things, and that's pretty much all of the interaction you have with them. And they're pretty much. I talked to them today about your.
Yeah.
They're pretty much almost done. They should have something done
wow.
by this week.
Okay. Cool.
Yeah.
Cool.
So we'll be able to see, hone it, and then when we get that package, we'll be able to go through it together, which is the other thing that we do to make sure that it makes sense, that it's ready to send to the investor community and start, marketing and seeing what we can get.
Right. So, guys, if you're out there, I guess one of the biggest reasons why we want to do this show today is that if you're somebody out there, whether you have an idea, you want to create a business, or you're a current entrepreneur or business owner, and you need access to money to help to realize your vision, your dream, well, you can give Stan with Market Street a call. You don't have to be intimidated or scared or think that you can't do it or that you need to be doing some monster number in sales. There's the little guy out there that has a dream. You got to remember that Facebook started out of his room. Dell started out of his room. The Google guys, they started. It's a little idea, man. And you get the right people behind it. They give enough fire, enough combustion, and then that capital, that thrust. If it has legs, I mean, it'll grow. You can make it happen. So, if you're out there and you're one of my customers, you're a follower out there, and you're really looking to what the next step is, and you have something, you think you have something special, don't call them if it's something stupid. But I mean, if it's something that actually makes sense and you need money, give Stan a call, man. The guy, I've known him and he's honest and trustworthy. I definitely vouch for him. Reach out to him. All his contact information will be on this link below on the show, and so reach out to him. Stan, thank you so much, man, for coming in today. That's Stan Abiassi, guys, with Market Street Investors. Guys, thank you so much. This is Angelo Christian with Learning Hub. We do 3 great shows every single week. We do Real Estate Insider, Learning Hub, and Influencers, and we work very hard. All this is free content. We don't charge anything. So if there's anything that you guys want to see, leave a message down in the chat box below. Please share this. If you know a business owner, if you have a friend, you have a family, share this. Follow us on Instagram, Facebook, and YouTube. It's my 3 favorite social media platforms. Thank you so much for checking us out. We look to empower you with real estate investing and financing. And we'll be back again next week. Thank you so much, guys. Take care. Peace out.